Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over a lot of oil information that I'm seeing, some Twitter information, and some market balances on oil as well. Uh, every once in a while, I keep looking at oil. I think we're going to come up into a squeeze situation here this year, fourth quarter especially, and we're probably already squeezing up already. So the price isn't going to go straight higher. We're just going to squeeze on up. We're going to make our higher lows, higher highs, and move higher. That's for this year and maybe even 2023. We'll have to see how the inventories do and where the prices eventually go. But there's a couple of things I want to cover. Some of the articles that I'm seeing. Not that I really put too much weight into the articles. I look more at the supply demand balance, which is the first slide here. I got this from Josh Young on Twitter. So he's runs Bison, maybe Bison interests analysis. That's what he runs. But we'll go through it. We'll step through it together. It says demand is recovering faster than supply, and it's referring to oil. It says while oil demand has been recovering to its pre-pandemic long-term trend, there hasn't been enough supply recovery to meet it. Deficits may worsen in 2022. Higher travel demand, soaring coal and gas prices, and an improving quality of life in developing countries are leading oil demand to surprise to the upside. New supply is unlikely to come online fast enough to meet this rapidly growing demand due to problematic energy policy and ESG activism, which are reducing capital available to the industry. This coincides with an already dramatic reduction in investment following the 2014 oil crash at a time when an energy crisis is already well underway in Europe and Asia. Sound very similar to the Finding Value channel, doesn't it? Because I'm tying in other energy crises throughout the world and how it's moving about the world and how I think it's coming even to the United States and probably going to grab our natural gas prices and yank them higher with all the other natural gas prices around the world. So this is global oil supply, demand, and trajectories from 2010 and then a forecast of 2022. The red line is the demand trajectory and how we took a little detour off that trajectory. And then the supply trajectory is the blue line. And you can see there's a gap between the supply trajectory and the demand trajectory moving forward past 2020. That gap is the deficit between these two lines. So the shaded bars are your demand surplus or your supply surpluses and deficits. And you can see that we had a surplus in 2020. That cut back a lot of investment into oil. And then as we came back online, there was a large change in the trajectory. Demand came back faster than supplies coming back. And that's what the deficits are showing in 2021 and 2022. And that 2022 is going to have a very large deficit of demand eating through inventories. So prices are going to have to react favorably if you're an investor to the upside until demand destruction occurs. That's what we're looking at. And what we're looking in the articles is evidence of this. It says U.S. sees highest gasoline demand since at least 2017. And if you go back, 2017's here, and we're trucking higher above 2017. U.S. gasoline demand on Sunday jumped by 12.6% compared to the previous Sunday. So we're ramping up demand here. U.S. gasoline prices fell slightly last week, and you can see the disconnect. Prices can fall at the same time that demand jumps. And sometimes that happens, guys. It's not 100% directly correlated. It says, according to Gas Buddy data, U.S. gasoline demand on Sunday jumped by 12.6% compared to the previous Sunday. It was also 14.5% above the average of the last 4 Sundays. Big increase in demand, irrespective of what the price has done. And I'm seeing higher prices here. I think we're seeing higher prices everywhere. And demand's moving on higher. Looking at this, it says the American Petroleum Institute estimated that there was a surprise draw this week for crude oil of 4.3 million barrels compared to the analyst prediction of a 25,000 barrel build. U.S. crude inventories have shed some 77 million barrels since the start of 2021 and about 20 million barrels since the start of 2020. Average gas prices in Los Angeles hit $6 per gallon. Gas Buddy's head of petroleum analysis wrote in a tweet, noting that compared with an average of $4.75 per gallon a month earlier. That's a big jump. For now, gasoline demand has shown absolutely no signs of buckling under the pressure of higher prices, even as California nears an average of $6 per gallon. With spring break travel well underway, he said this week. That's crazy to think that we've had such large increases in the price of gasoline and not much demand destruction yet. Looking under here, it says Bank of America. Critical levels at Cushing may lead to historic short squeeze in oil. The storage levels in America's largest oil storage hub have fallen to extremely low levels. Crude oil inventories at Cushing have shed some 13 million barrels since the start of the year to stand at 24 million barrels as of last week. Guys, read that sentence and try to comprehend that, right? We've shed 13 million barrels out of inventory and this year, and we have 24 million barrels as of last week. This is going to be epic if this continues. It says the risk of a short squeeze is the highest around contract expiry dates near the end of this month. Given the market is desperately short barrels in the near term, we see increased risk of a short squeeze as WTI moves towards expiry each month, Blanche said in a note. So we're eating through inventory, and we don't have much inventory left in Cushing. This is going to get real interesting, I think, very soon. Better hold on to those oil shares you guys got. Looking at this, it says Europe faces systemic diesel supply crunch. Europe risks being exposed to systemic deficit of diesel supply that could worsen and even lead to rationing of fuel. The top executives of the world's largest independent oil trader said on Tuesday. That's crazy. Looking at giant oil trader Vital, demand gap will widen over the next few years. They're looking at the next few years about this demand supply gap. What they say is, Willist, we anticipate oil demand falling in the long term. Demand is likely to continue to grow for the next decade. Given the limited investment in production, we expect a demand gap to widen over the next few years, CEO Russell Hardy said in a statement on Monday. That's crazy, guys. Looking at this, UK homes are turning to solar panels to tackle sky-high energy prices. I think that's obviously going to be something. And if these oil prices go ballistic, I would suspect that more electric vehicles will be sold. What I'm doing is I'm kind of positioning some money into some other minerals that are needed in the electric vehicle realm. I've got a substantial investment in rare earth metals. I'm ramping up my platinum holdings, and I've got investments in the platinum mining companies. And I'm starting to look at other and branch out to other things like lithium and other graphite and other minerals that are used, copper, nickel. I'm positioning quite well for this as we're basically skating to where the puck is going to go here. And I used to play hockey, so I don't like all these people using hockey analogies they've never played. It says, we expect energy prices to continue higher despite volatility, says Goldman Sachs. This person, head of the energy research and senior commodity strategist of Goldman Sachs, joins Closing Bell to discuss his outlook on the price of crude and oil after reports of attacks on Saudi's oil facilities. Looking at Jeff Rubin, he was pretty vocal last bull market in commodities. He's saying $200 a barrel oil price back on the horizon. OPEC has no spare capacity and Russian oil is being shut out of a number of markets. Meanwhile, the US and Canada, countries that could grow production, are more interested in subsidizing wind and solar than in drilling for oil. That's his opinion. Looking at the bottom here, I have one chart that I grabbed from Twitter. This was someone who put in basically a channel We've pulled on up, we've pulled back. We could hit this area down here, a little over $100, maybe about $100 is the trend line. We very well could go back there, and I hope we do. Why do I say that? I would be happy to add more shares into some of these companies on a pullback that I'd like to get more exposure to, that I think could be good investments. So that's what I think. I am not in the camp that my investments have to go up. What I like to see is I like to add on weakness and where support levels are at. So that's what I've got for today, guys. I wanted to share that with everybody on some of the articles that I was reading. I think I just look at the inventory. I look at the inventory. I see the deficits eating through that inventory. We're eating through the strategic petroleum reserve as well. This doesn't look good, guys. That's what I think. I think we're going to see much higher prices than where we are today. It very well could be $200 oil. My guess is between 150 and 250, and I think I'm being conservative. That's what I see here. I don't know what's going to happen if demand doesn't get destructed. Demand destruction doesn't take place here shortly. If we continue to dive at the rates that we were diving, we're going to see a short squeeze. That's my opinion. And I've positioned I think I'm pretty well positioned for it. I haven't touched really much of my energy. I've only picked up energy shares. I do think with natural gas, looking at the market, looking and doing my daily technical market updates, natural gas looks good to move to the upside as well. So I think electricity prices are also going to be under attack. Uranium is sitting in a good spot with nuclear. They're probably going to start pushing and extending more of those nuclear power plants as well. So energy in general is going to be a huge opportunity for investment of anything directly related with energy, anything around energy, and the minerals that are supporting energy. Energy is the basis of an economy. It's the basis of life. It feeds us. We convert energy into food, which is energy for us. So the importance here is it's very, very, very important. Everybody needs it. Everybody wants it. And wealth depends on it. So I see energy investments as being probably some of the best areas for investment over the next 10, 20 years. So I am positioning for that mindset. I'm positioning for the energy that is needed now. I'm positioning for the energy that's needed 10, 20 years from now. And hopefully that's basically where my portfolio is going to mainly sit. And when I say energy, there's a lot of minerals that are used. Lithium, graphite, cobalt, copper. I don't really have too much in cobalt. I've got tin. I've got platinum and platinum group elements. They're also a part of this. They're used in the fuel cells of hydrogen. I think we're going to ramp hydrogen. I think we're going to ramp absolutely everything. So if this sounds interesting, guys, definitely give me a thumbs up. Subscribe to the channel if it sounds interesting. You like listening to this type of stuff. I've got the website below, finding-value.com. Sign up to that. I'm literally populating it with all of the market balances, all of the potential investments. I'm doing lots of research into companies. I'm looking at charts. I'm going to start populating that website with a whole bunch of information on how to play this energy, at least in my opinion, the energy investment of our future. And I'm looking at battery materials and trying to get some of the things that are the most generic. So something that's a feedstock that basically you can't get around. So I mean, like copper, that's going to transmit electricity. There could be other opportunities as well as we progress forward, and I'll look at those as well. Maybe even graphene and other things. But we'll look at it. I'll post it on the website. That's the main hub that I've been going to be posting all of this content, and you can see a lot of the supply-demand balances on it. There's a silver membership that talks about just the educational aspects and the ratios and all that. The platinum aspect gets you absolutely everything. Gets you the education and also gets you all the picks and all the charting and all that stuff. So what I try to do is I try to combine, and if you guys have been on the channel, you know this, I try to combine the fundamentals, the market balances, the inventories, and then also the technical analysis. Once you can marry all that up, it's like cheating, and the ratio analysis. So I'm doing that all for you. Hopefully you guys can see this all kind of align. And once you see that alignment, it gives you that confidence to hold on. And that's what's important. Looking at this stuff gives you the confidence to hold on for long-term investments. And it's going to be volatile. It's going to be a heck of a ride, guys. I'm going to be right here with you on the channel. I started this channel because I've got, 18 years of investing experience. I've been riding through markets. I rode through the back half of the last commodity bull market, and I've been just riding through it, guys. So hopefully you guys can learn a lot from me. I've made a lot of mistakes in my early investing life. I've done a whole bunch of research on how to figure out how to nail this all down, and I think we're getting pretty close to a very solid thesis, very solid way of choosing investments, finding investments, seeing where the market balances are, and then looking at the risk reward of companies. The risk reward of companies is incredibly valuable because you don't want to take on too much risk if your reward isn't there. What we want to do is we want to maximize the risk reward opportunities. We want risk adjusted returns, basically, that are going to give us the leverage that we expect to get out of the market. So look for that stuff on the website, guys. I've been posting more stuff. You'll see some new things coming out as well, and in some new sectors. Thanks for listening, guys. Give me a thumb up. Subscribe to the channel. Thanks for listening. This is Finding Value.